what type of crypto traders are at risk of an audit from the IRS? And this is a great question. And one of the reasons is a lot of times people call me up and I would characterize them as very small traders. And they're extra worried, extra paranoid of the IRS coming after them in comparison to high-end traders and large traders who are not as worried. So let's put that in perspective. The IRS has, over the last couple of years, is retooling their methodology by how they decide who they're going to go after. And they're doing this by focusing on people who make $400,000 a year in, catch this, total positive income. Now, what's total positive income? It's not the same thing as your adjusted gross income. It is definitely, it's your W-2 wages, it's your other 1099s, but it's basically all your income without considering the expenses. What does that mean? So if we're talking a business, if you have Schedule C business income, it's going to be the income without any of the expenses, which can be quite a high number. And for a trader, it's going to be the total value of all the proceeds of all your sales without considering how much you paid for those coins and assets. So that could be, depending on how frequently you trade, an extremely large number. I've had some clients where their total positive income is up in the 400 million range. So if you are the more frequent a trader you are, the more you're going to generate proceeds events, which are going to come up with higher and higher total positive income. All right. Now, so how do you protect yourself? Well, if you're someone who rarely trades, you're just a hodler, or you just buy, your audit risk as a crypto trader is probably very low. It doesn't mean you shouldn't be accurate, but your risk level is quite low. If you are a medium to high frequency trader, or when you trade, you swing big dollar tickets, dollar values, then you are a high risk trader. The IRS has identified that the amount of taxes that are uncollected each year is roughly about $1 trillion. And they have said that almost half of it is related to crypto traders who are not reporting their crypto income. And they estimate that roughly 75% of all crypto traders are not reporting their crypto income. So this is a sweet spot. It's the honey jar for them, and it's big ticket, and they're coming after you. We've observed that the IRS has been a little bit reluctant to engage in auditing in this space here in the last year of the Biden administration. And I think until some of the rules stabilize and some of the, the Doge staff reduction stabilize, I think the IRS is going to be a little bit guarded in initiating audits in this space. But when they do, you can expect all hell to break loose. They're really going to crack down hard. I know they're actively looking for additional audit partners to do audit gain calculations of crypto amounts. So this is going to be a very hot spot. And if you are a high frequency trader, what can you do? Well, first of all, report your income, report it correctly. If you don't know if you can't do it yourself, or if it's complicated, call us up. We can do it for you, full service. We also offer the tax shield product that we can watch, make sure that if you are flagged for a tax audit, that you can find out about it months before the IRS contacts you, and thereby fix it and avoid maybe a 20 to 40% accuracy penalty. The other things you can do is take advantage of the bull market to maybe pay taxes for prior years that you didn't file. The IRS has the ability to look back a long time to get non-traders. So time is on their side. And take advantage of the bull market where you're making money to clean up past errors, and so that you can sleep better at night. And if you haven't been reporting for a few years, probably a good place to start is to call me at our cryptotaxaudit.com/contact and schedule a consultation with me. We can put a plan to place on how you can move in towards compliance in a sane manner. I wish you the very best.